Okay, morning everybody. Right, let's get started. All right. So as we saw from last night, US had a massive down day. S&P down 2%, Nasdaq down about 3%. It's the worst single-day drop since 2011. As you can see from that chart there, worst hit with the technology shares, financials, healthcare, and consumer discretionaries, but pretty much every sector down. Then biotechnology index is 19% below its February high. I think 20% it's considered a bear market, so quite a big pullback in a reasonably strong market. And then I don't know if this was a catalyst, but the jobs claims number um, was the lowest in 7 years. Obviously, they're playing some kind of tapering play. The traders thinking that they're going to taper more quickly on that number. I'm not sure, but anyway, a big sell-off in the US ensued. This is a quick chart just showing how often consumer discretionary stocks in the States have led previous bear markets. Whenever we get a bit of a sell-off, we get some guy coming out saying that this is the next sort of big bear market, and you really got to take these things with a pinch of salt. But anyways, probably a sector just to keep an eye out on anyway. Consumer discretionary is starting to come off a bit, and they did sort of lead the previous bear markets in 2000 and 2007. And out of Asia, only one that was really hit hard was the Nikkei. I mean, you can see they're all down, but Aussie down less than 1%, Hang Seng down only approximately 0.5%, and same with Kospi. Shanghai small down. I think Nikkei, mostly due to yen strengthening. So we'll take a look at that chart in a second. Corporate action, we've got JP Morgan coming out, Wells Fargo coming out later out of the States, two reasonably big ones, so keep an eye on those. Key factors today, Japan came out with some data earlier. Chinese data, PPI and CPI came out pretty much in line. We had German CPI that came out at 8, was also in line. And then the other ones out of the States, there's PPI, final demand year on year, and University of Michigan confidence. Pretty light today. Nothing that's going to move markets, I wouldn't imagine. All right, let's have a quick look at some charts. The first one I want to show is the S&P. I've drawn in the trend line, the short-term trend line going back to last June. Coming in around 1800 is pretty much the next major sort of level on the S&P. We've also got the 200-day moving average coming in at around about 1767 at the moment. So not too much underneath this breakdown from the 1840 level. So we could see some further downside of the S&P. But as we know, every time the S&P sells off, we get a big bounce. So I wouldn't play it until it happens. On our local market, the Aussie, if we just zoom in here to have a look at some interesting levels. So the previous low was at around 43,400. So that could be a possible level to target the Aussie on the downside. I see we've opened down 400 points to 43,529, 520 at the moment. So we're pretty close to that level. A breakdown from that level could send us to, let's have a look where the trend line comes in. Looking at around, well, there's a pretty interesting level here at sort of the 41, call it 41,700. It's a bit rough there depending on whether you draw it in the wicks between 41,750 and 41,700. And then yes, there's a bit of a level here at 42,350 as well, where the 50-day moving average is coming in. So yes, those are just some levels to watch in the Aussie. If I get this chart now. And then the last one I wanted to show was the last sort of macro I wanted to show was US dollar yen. What have I done here? So we're in a bit of a wedge here. A bit of a broadening formation, and the yen is sitting right at the, well, should I say, I've drawn this wrong here. We'll try this again. There we go. Okay, so as you can see, the yen is looking to strengthen through this level. It's a pretty interesting level that we're sitting on now. If we get a reversal, that could obviously mean that there's risks back on. But if we break this, it could be a real risk off, and we could see some real strengthening out of the yen. And obviously that won't bode well for markets in general. So a big level in the yen and a big level in the markets in general. So keep an eye on this level, as Joe's told you in previous weeks and months. This indicator can lead markets. So if we get a breakdown from this level, we could see some further weakening in financial markets in general. All right, the first one I want to show out of our local stocks is Kumba. Kumba, we're seeing a very important level here at 400. It's where we gapped down to. Yesterday I'd pretty much held this level exactly. If we can shake off this recent sell-off and get through that 400 level and hold there, then I would imagine it's a straight shot to run this between 430 and, yeah, I'd say 430 is a pretty important level. If we can't shake it off and we get a reversal of current levels, first level of support is 383. A breakdown there would confirm a bear flag and further downside for Kumba. But watch this level. This 400 level could be quite an interesting level to play off. Second one I'll show was Amplats. We'll show it on a weekly just to get a better view. You can see quite a clear inverse head and shoulders there, breaking higher. It closed up yesterday in the auction. Didn't trade great for most of the day though. We could also see some weakness coming in now, based on the US selling off. But either way, 450, 460, if we do get a pullback to that level, I would say is a very good level to enter Amplats for the continued target of, say, 276. Yeah, it's up in the 600. So it's a really a good target for Amplats if we can get some continuation of this inverted head and shoulders. All right, the next one I want to show is Foschini's. As most people in the market will know by now, the RCS unit was bought by BNP Paribas, along with Stanbank also had a piece of that. That caused an initial buying reaction. It actually didn't trade well for most of the day, but then sort of at the end of the day they came back and bought it up a little bit. It's broken up above this previous 2014 high. We're targeting from this little pattern here. We're looking at about 116, which would take it to its previous high from October last year. Obviously, we're going to see what happens with general markets, and might make a difference. But if we can see it holding above this 108 level for a day or two, and it can shake off any market weakness, then I would say that would definitely be the next target for Foschini's. And the last one I want to show is Imperial. Imperial also looking nice, like a nice little cup and handle here, popped up above that previous high at 189, and the next sort of small level of resistance is 119, but I would say we could get 199, but I would say we could definitely get a little more strength out of this one. Looks like it's also popping down from its recent downtrend. So keep an eye out for Imperial going forward in the next couple of weeks. That's all for today, guys. Good luck. No worries.
Just click broadcast there.